on Greece. Let's get that out of the way first. Were you surprised by that?
Well, somewhat. It kind of goes to show that the markets do have a lack of memory, but I think in some ways the ratings agencies have become a little bit irrelevant at the moment, given that a very few people would hold long-term Greek debt at the moment, and that has been the issue over the last few years, where a lot of the banks have been trying to close their exposure to Greek debt. So it could be a little bit late in the day coming, and as you've started to show off with the unrest in Greece, that still continues, and I would expect that to impact Greece's GDP and growth outlook. So in terms of stability in their financial sector, it will more than likely come from a stability in their actual domestic sector as well, and that's not happening anytime soon.
All right, just looking at UBS, shares off about 0.4%, so not a great deal of movement. Pretty much priced in, it seems, this, right?
It looks like that, all right. I think in some ways they were the first bank to actually say that they're being investigated for these LIBOR investigations when the fallout came from Barclays. So I think in some ways it did manage to manage the expectations for this LIBOR problem. But I do think in some ways the fact that they were managing to change Japanese LIBOR rates as well is a little bit more damning. And I think in terms of the reputation for the bank, which was deemed a very safe bank, being Swiss and the second biggest bank in the UK, is probably quite problematic for it going forward in terms of investor portfolio interest.
Do you buy banks at the beginning of next year, given what's happened to them, given the price now?
There were many who say that we're reaching a bottom in the housing market, but I think unless we see some proper legalese come into play, where the banks have to stick to the audits and have proper audits taking place on the banks by an independent adjudicator, I would be slightly wary about investing in the banks for the time being.
Quick word on the fiscal cliff. I mean, it amazes me when I look at the S&P and the Dow and some of these markets, this upward trend they seem to be caught in, despite no real positive news coming out of the US.
I think no news seems to be good news for equity markets at the moment, and we're seeing that in terms of like the gold being sold off. There's a certain amount of positivity in the markets on the basis that there hasn't been anything damning coming out of the US. So I think in some ways what we'll see is a bit of a sticking plaster towards the end of the year, which will push out the real issues and probably till the first quarter of 2013, and that might actually see the equity markets continue to rally into the early part of 2013. But unless they actually come up with a proper decision in relation to the deficit, that is when you're going to see the ratings agencies come in, and that is when you're probably going to see a massive sell-off in the equity markets on the basis of that.